Let me begin the recording now. Just give me some Y or anything that looks like a Y. That you can see my screen, you can hear me well. All right, thank you for the Ys, guys. Thank you for the Ys. Okay, so basically, let's go over our positions. Not many of them moved, or well, they did move, but not many of them changed the directions for us. There are a few movers that we will want to discuss about, and again, remember FOMC in few hours, 4 hours, right? We will be exposed to the hints of what to come, and most likely that what will affect the market on the coming period. We got some good news from the pound. Retail sales will turn to be very positive. The good news keep coming from the pound, and that's where we got the boost continuing. If you remember the beginning of the week, guys, especially on pairs like pound yen, pound kiwi, pound franc, what did we say we can expect to happen? Some pullbacks, and for some of them, some very annoying moves. Remember, this was our session on Monday, which I asked you to watch the recording if you still did not, right? That's more than normal. Why? Simply because, wow, so many geese are flying now above my roof, guys. You hear that? Could you hear that? Or not really? Wow, just next to the window of the office. Amazing, like 50 of them. Wow, wow, wow. Yep, that's geese. No, no, not chicken. Geese. Wow, like 50 of them, like huge group. Amazing, really amazing. They're on the way to the FOMC announcement. Good one, Randy. Good one. They're coming back to see what's up on the charts, right? Yeah, actually now they start to winter is coming, I guess. So they start to look for alternatives or so. Even though there are rumors that Canadian geese start to be very, very. Um, they're coming back. What's up, guys? You want to come join me here? Let's come. The rumors say that they become too lazy and they just are looking for places inside Canada because they were normally moving to the Caribbeans, Mexico, and so on, and they become lazy. Well, we all are, right? You know, in this reality, we all are. Yeah. No, these are wild geese. We are not allowed to eat them. I wouldn't even want to be honest. Anyway, let's go back to trading. Right? Geese are over. Okay, guys. So pound yen, basically, that was why I wanted to warn in the beginning of the week on Monday that this is acceptable, and as long as we don't have our invalidation, and I just want to remind you, what is our invalidation? False breaks with lower lows or triple cycle down followed by double cycle up and breakout. That's our invalidations, right? That's all. Very, very important. Pay attention to that. And we didn't have any. Therefore, any drop like we've had is basically an opportunity to continue with this trend. Well, of course, if you get your alerts and your opportunities with any of the systems you use. It's very, very important to remember these things. Such moves are acceptable, especially after previous week and this flies. What is the normal human nature thing to expect now? Wow, more to come. I just want to jump in and I want to take more, more, right? But we do have to remember that the first target, the 38.2 of this was reached, and now we have also expansion of this cycle. Therefore, we can expect some problems to the bulls, some fight back from the bears. That are the places where market switches hands. Okay, this is exactly where the market switches hands, and we always need to remember that when we have the long-term cycle, but then we have short-term cycles reaching to some, we call them problematic zones. That's our time to be more careful. So just wanted to show you that. Now, what pairs were actually moving for us, providing us the opportunities for the main one was the Euro Kiwi, right? This one, well, it's probably our best this week so far. Our goal was to catch these situations of dropping highs, dropping lows, and we said as long as we remain in that, we are after ourselves. Now, our targets. Just want to remind you guys, this is our triple cycle we have from the daily chart. So we are going to here, right? Probably to 50, but we do need to respect the 38.2 as well and see what is happening there. So the bearish pressure remains on, no changes for us. Our invalidation that was here now is moving to here. This is the high for invalidation. Okay. Any questions about this one, guys? Well, I know from private messages that many of you are writing that, so good for you guys. This one is probably one of the best payers for us this week. So it's pretty cool. It's pretty cool. Okay, next one then, which we have on our list is the Aussie versus the Kiwi, another Kiwi pair. And we have this one, we accept here a move down to 109, which was triggered. We do accept even 108 and 107, but currently this is the trend line for us for the invalidation, right? For the short-term sales. We, for long-term, will want to go with buys here. These short-term sales are acceptable, but we are after bigger moves later on. We're not there yet, so the bearish moves are still here, still acceptable, still correct. Next one we have on our list, which is also moving, is the dollar yen. Dollar yen, we said that because we reached this short-term cycle, and on the 1 hour chart we got an expansion as well. This is where we can accept. Remember this session from Monday, guys? This is our magnet zone, right? And we got here two false breaks, 1 second, and they both provide this convergence, which is seen on the 15 minutes because 1 hour chart is in play. 15 minutes, we got a pullback, sorry, and we got a little correction to the downside. For long term, as long as this low holds, we do accept any pullback for a buy. Buy further to the top of the range, right? So these little pullbacks currently, it's extremely little because it's like 20-30 pips, nothing more than that, are acceptable. Yes, it could go deeper. By ideal, we want it to go deeper, right? But as long as it's above this low here, 109.50. So every deeper move, we will be looking for buy setups to form after that and looking for buys. Once again, I just want to remind you guys, if I say we are looking for buy setups, so we will be looking for buy setups, it does not mean we are going to hit the buy button right away. Okay, that means once we reach the levels, we are looking for the setups. Depends on what strategy you apply and you use, of course. All right. Next one we have moving is the New Zealandian yen, another pair that we have both directions. Well, currently preferably long as this bottom holds. As we've been talking about, our rallies continues, and there is a good chance we are for that. 61.8 top of the range again, or maybe even further. You see that, guys, where we have it here. This is our critical zone, and the next one is here. So until then, we remain bullish here. Our current invalidation would be for the buys would be let's see. This one is irrelevant. This one irrelevant. This one yet remains our invalidation. We do, however, need to pay attention to the running short-term rallies. What do I mean by that? That this cycle is approaching to 161.8, and this cycle is approaching to the duplication. They are all inner, right? This becomes a good area to cash out profits if you are still long, right? Or to look for the profits based on your systems you use. This is a good zone for a possible slowdown and some kind of pullback. Okay? Why? Simply because we have few magnet cycles, few magnet zones creating on two different cycles. Okay? So this is where we would expect some kind of slowdown and pullbacks. What kind of slowdown could happen there, guys? Very simple. We need false breaks with lower lows, and then we can expect a pullback, or alternatively we need 1 2 3 1 2 breakout. This would be the beginning for a possible correction down for us. So keep an eye on this one. This is another good mover for us this week. Basically, actually all the New Zealandian pairs moved well. Pound New Zealandian, which for long term we are after buys still, is making for us short-term correction, which is more than acceptable. No signs for a stop currently. We have a trend line here. We will see how it goes and how it respects. And if it starts to stop, then the short-term directions would be over. Correction, sorry, would be over, and we will start looking for the buys. But as for now, we don't have anything. So the short-term corrections currently remain still on. Okay, OZN is approaching to the magnet zone 61.8. And as I told you in Monday, and as we have in our list, guys, we accept the buys yet to this zone, but we do need to start pay attention for possible false breaks and convergences, right? Now, on the 4-hour chart, we did have false break. It was right here. Then we got another one here, but we never got convergence yet. No lower lows for us. All the lows are going higher. Therefore, no sells activated yet. No convergences. And also, no triple cycle down, double cycle up with the breakout. Do you see how it all works, guys? As long as we don't have our invalidation, we continue with the current trend. And even though we are so close to levels where we could expect retraces from, as long as we do not have the signs for it, we do not begin. We do not force it. Right? Very, very, very important to pay attention to such things. It always proves itself over and over again. Euro yen, same story. We don't have yet any false breaks, any convergence. So we do have on the 1-hour chart some warnings, false break here and false break here. We don't yet have convergences. We don't have yet any 3 waves down, right? This is our current low. If we get 1, 2, 3, 1, 2, that means short-term sells are on. As long as it didn't happen, no way for us to discuss about it. All right. So that's for the yen pairs. What's that? Where did that come from? Oh, nice. I just learned how to put this this arrow. Great. More tools from the GoToWebinar platform. Excuse me for 1 second, guys. Just a second, please. All right, great. Let's continue. Okay, so the next one, New Zealand and Canadian. Now this one continues further, much more than I expected. And now it's time to most likely say that we don't have currently any signs as for now for bearish continuation. Why? Because most likely we crossed the 161.8, right? Most likely now it is for triple cycle or special cycle, which is like that. 1, 2, probably, and 3. If that's the case and we cross above this high, then game over for the long-term sales. As for now, we would be looking for 2 waves corrections here, breakout, and continuation up. So probably what is happening now is that we are for correction of the double cycle. So 092 could become again in a play, and that will be also the retest of the trendline breakout here. So that's more than possible. Okay, so the long-term sales which I wanted to be involved with and was looking for 2 waves up now start to show its signs that it's more than 2 waves up. And we got the divergence, we got the signs. We never got a stop with a trendline breakout, not here, not here. Therefore, no real sells available and possible to be considered. And the only thing we do need to do in such case is to say, okay, most likely Mr. Market does not agree with the long-term direction from the weekly range yet. Here, just a reminder, and there is a chance we are going to see that pullback deeper, and maybe then another sells, but that's too early for now for discussion. So New Zealandian CAD, we currently remove the bearish plan. I am back to neutral right now because for me it's not the best tradable conditions. Weekly, daily, 4-hour don't correspond altogether, not even close to each other. For me it's neutral. Okay, so the bearish plan we were looking at should be removed. Which one, Nick? This one or the... you mean the breaking one? The weekly, this one? This? The 4-hour chart? This one? Well, that's of course that's what activates our validation for continuation of the trend. Otherwise, how do we know that the double cycle is over? The downtrend I didn't show on the 4-hour chart. Not sure which one we talk about. Anyway, The idea of the trend lines, like with the euro dollar also. Remember on Monday, that's what we said. We need at least to get out below the trend line in order to understand, okay, there is a chance bears are back. Otherwise, it's just a guess. Same with New Zealandian CAD. Yeah, we wanted two waves up or a range. None of them came activated. None of the trend line, not lower lows, was created. So why would we start looking for sells? Just because the weekly direction is shows still bearish? No, of course it's not a reason. We need the active setup, right? An active setup is two waves and then continuation, at least by breaking trend line or lower lows for the returning momentum. Correct? So yeah, it has its impact for sure. But again, we can see all the New Zealanders are moving pretty much the same direction, which is good because we had our opportunities on all the rest of the New Zealanders. Oh, the Kiwi, shorter. Nick, you got your 109 you wanted? So I hope you're happy. You're happier now. All right, cool. New Zealand dollar, which we are in both directions. New Zealand Kiwi, which we are in both directions, and for longs currently. Euro Kiwi, which we are short. So they all were great. We is asking for statistic when you have the strongest day. Expect its effect. We talking about this? The statistics? Indicator? Yeah. If there is here, if you have your weekend, let's say you have your days right for tops. We have it on 21st, 23rd could be the top, right? Just for example. Then if there is a weekend in between, yes, then it doesn't play a role. We just have your day like you skip the weekend basically. That's all. Weekend doesn't have its impact. Okay guys, so my next one I have on the list is Aussie versus the franc, which finally regained the momentum for us with the break of this trend line. So basically what happened there was the range that we were talking about, the weak breakout of the range. Remember we spoke about it, guys? Weak breakout. They retraced inside, and here you go. Retraced, retested, boom, breaks, and finally shows some muscles and some continuations, right? So break of trend line, higher highs here, and finally moving forward. So what's expected from this place? Most likely, if there will be no changes with the FOMC, we are to 61.8 of this cycle, which is here, and that's definitely more than possible to see that above the 078, closer to 079, and even so. It's moving good for us, and we can say that we accepted both directions for sure, but currently the sell's irrelevant for us, right? Our invalidation would be here. This is the invalidations for the longs. Okay? For this pair, really nice. Really nice. Any questions? Any questions as for now about any of these guys? Okay, no changes for us in terms of the commodities. Gold, silver, oil all remains on. What we do need to start to pay attention to is where is that? Where are my stocks? Oh, here, the Deutsche Bank, which is correcting itself for us. We want to see that breaking this trend line again, right? And then we are in a regained momentum. If it happens perfect, this is our invalidation. If we don't have trend line breakout to the upside and we reach the invalidation zone, we move back to neutral for the immediate period. Okay. A few of the Americans that we have on our list are Groupon and Google. Groupon, we want any pullback for a buy. Just to quickly remind you here, no change here. We are for the top of the range. So every pullback we get, we consider as a buy. We have Google and its trade angle. Also, let's see what's coming here. All right, and Renault we cashed out partially. We have Kraft Heinz. Where is my Heinz? Which now goes for the second scenario for us. We are after buys, and our buy should be like this: breaks for higher highs, retrace for a buy. Okay, so we had two scenarios. One of them is the trendline breakout. Second is the false break and the convergence. We can see trendline is not broken, so the second one comes into play. That's all the updates I have on my list, guys. If you want me to go over any of your pairs, please let me know, and I will. Basically, the pairs I did not update means that there are no change of levels or anything like that. So dollar CAD. Well, yeah, dollar CAD. Currently, what we have is one, which was triple cycle from 1 hour chart, yeah, and two. So we don't have any validation or invalidation yet, especially not below the trend line. So this correction still could go higher. We have our invalidation, which is here, the bank zone. Going up to there is more than acceptable. We will want to see the trend line breakout to the downside to start talking about the sells again. For the short-term corrections, which we accept, we still can see that going into the 161.8, which is 124. Still possible, as long as our trend line remains on. Until then, these corrections are possible. Okay. Lucas, gold. Here you go. Gold 4-hour chart currently is on double cycle. Right? So we got what we wanted. Now, let's see if that's all, or are we going deeper for a full duplication, like to here, or maybe even 161.8. We currently do not have trendline breakouts. We do not have any convergences on the 1 hour chart. We do have a false break here, alternative trendline false break, right? So that's what could happen with gold. We have 1, 2, 3, 1, 2, and breakout. If that happens, we are back to buys. Okay, as long as it didn't happen, our short term is, well, because of the fact here is because of the sells did pay what we wanted, right? And the first target was reached. We still can expect the second target here, 1300, still possible, still doable, maybe even a bit lower. And that's why I say, as long as we don't have validation again for longs, short term remains acceptable for corrections. Only if it has the break of trend line and creates for us triple cycle on the 1 hour chart, it's time to be careful with the sells. Okay, but currently we do have the two waves, so I think it's smart to have your cells cashed out. Yep, we do have divergence here. This is why I say it's very smart to have your position cashed out, or at least partial, yeah, to make sure we don't leave. Sorry, we don't. Yeah, we don't leave the money on the market, and we don't lose this move down that we were looking for the previous week. It's 20 points down. It's pretty cool. Pretty cool. Nick asking, with the GBP pairs, are you just waiting for the two-wave pullback on the 4-hour chart? Two-wave pullback on 4-hour chart or daily or a range. That's all. That's what we need. Okay, Euro pound, leg number 1, we have it. If we have leg number 2, classical, or that turned to be a range, classical. Okay. Yeah, gap don't change my counts, Lucas. Gap don't change my count. Okay. Danielle, Euro Aussie. Let's put the Euro. Well, Euro Aussie is tricky one, and as I said, mainly because this one can easy get this triple cycle making down to here. It can even on the same is go and make it to the bottom of this range. This is exactly why I still totally accept both trading here, both directions here. Both cycles are more than acceptable, even if we count this kind of a range on the daily. It's the plain side still doable. Can it go to 144? It can even. Oh, sorry, you're asking 148, 40. That's the thing. It could do everything here. You see this? It's a weekly range, then daily range inside the weekly range, and here 4-hour chart range inside the daily, inside the weekly. You see, that's basically like one of the most maybe one of the most not clear trades from all of them. Right? 4-hour chart range in a daily range, in a weekly range, completely can bring both. I would not be surprised if we break down here and continue for one more push lower. We have this triple cycle, 50% could be in play again. Would not be surprised. Okay. Gary, pound Aussie. No, pound Aussie didn't miss, but we didn't update it. So there is no change for long run. Still aiming for buys. For a short run, we had a cycle here corrected, right? This cycle, this special cycle. Boom, right? We have the 50%, so our long targets reached, and this is why we accepted the short-term pullbacks on the 4-hour chart. We accepted that on Monday. It's still on. Both directions are short-term traded for sure. We don't have any signs for something specific right now, so we can still have a short move down, then up again. For long run, we do want to continue higher. So every pullback down, we will consider look for buy opportunity. But these short-term drops are more than acceptable from Monday, and they still remain on. We don't see any. Sorry, we don't see any change on the count. We don't see any change in the directions. Long-term buys, short-term still acceptable. Okay. Anything else, guys? Anything else you want me to cover? Just want to remind you of our euro franc. Okay. Our current invalidation for the longs is here. We can see 116, 117 taken easy, maybe even higher, as long as we don't have the invalidation. So it's all good here for us. All right, guys. So thank you very much for being. Tomorrow, ideally, the market will provide some better view on some of the pairs and opportunities. It's going pretty nice this week so far with the New Zealandian mainly, right? We have New Zealand yen, New Zealand dollar, Aussie Kiwi short-term pullbacks, Euro Kiwi sales. It looks really good. No, Nick. We both are for looking for the monster sales for Euro franc. Don't get confused here. But I say as long as we don't have it valid yet for sales, the buys remain on. That's what I'm saying. And according to the cycles, 116, 117 are still in play. Our invalidation currently with the false breaks we have is this. As long as it's not triggered, it doesn't matter that we have the levels. The bulls are still controlling that, right? That's what I'm saying. And currently the bulls are in play. And we will invalidate the bullish view if the invalidation level come in place. So there is no confusion. It's all exactly the same. Okay? But as long as it didn't happen, bullish view remains on. That's what it is. That's what it is. Okay, guys. So thank you for being here. I wish you a wonderful day, and let's see what the FOMC would bring us. I'll see you tomorrow, and I'll see you in the Telegram later. Bye, guys.